Well, folks, I'm sure you've all seen it. Tesla closing after hours trading at about $195. We got a lot to go through in today's video here. Have it all prepared it for over the last several hours here. We're going to go through the numbers first and foremost in regards to Tesla. Then I'll share my thoughts on these Tesla earnings, the numbers first, okay? Then we're going to get into some extremely big statements out of Elon Musk. He made several, I would call it new information statements on the conference call that we have to discuss. I think some people might not listen to that conference call or maybe half listen to it. If you missed any of that conference call, you missed some very important things that were said during that conference call. I'll break it all down for you, the most important things there. Then I'll share my overall opinion on the conference call. Did I like it better than the last conference call or not? And then the last thing we'll get into is obviously I went into these earnings with a lot of shares, and I also went in with put option contracts as well. So we'll speak about what I'm going to do planning on tomorrow. Am I going to be buying the dip? Am I going to be selling off some of my put options? We'll speak about all of that. This took a long time to prepare this for you guys. I hope you enjoy it. The only thing I ask in return is that you smash that subscribe button if you're not already subscribed to the channel, and you hit the like button. That's it. Subscribe, like. Let's go ahead and get into this, guys. By the way, when's the last time I did a garage video? I think it's probably been 6+ months since I did a garage video. But I thought it was right. Tesla earnings, might as well film in the garage with the Teslas, okay? Alrighty, guys, let's get into that. So first off here, the overall earnings report was a D-, okay? It was a D-, very, very bad. So in terms of automotive revenues, only up 1% year over year. For Tesla, by Tesla standards, this is a disaster. I mean, to be quite frank, automotive revenues up 1%, nah. Energy generation and storage revenue was decent. It was up 10% year over year, where the exciting part of Tesla is right here. Services and other revenue was up 27% year over year. That's a real growth engine, obviously, for the company. And I look at and I've been telling you guys this for a while, the services business of Tesla is being very disrespected like Apple's services business was back in the day. And I don't think it's going to be like that forever. And I think, if we fast forward 3-5 years in the future, I think everybody's going to talk about Tesla and the services business just as they do nowadays in regards to Apple services business. Now, total revenue is up 3% year over year. I mean, it makes me laugh because it's so bad for Tesla, If this was 3M, they'll take 3% growth, but not for Tesla. Total gross profit was down a whopping 23%, 612 basis points, which is just a fancy way of saying 6.12 percentage points. Operating expenses was up 27% year over year. Yeah, you don't want to see your operating expenses up that much when your revenue is hardly going up at all, right? If revenue is up 50%, 60%, then you say, okay, operating expenses up 27%. But yeah, 27% up on a 3% up revenue number, disastrous. Income from operations fell almost 50%, down 47% year over year, rough. Operating margin was down 784 basis points. Once again, that's just a fancy way of saying 7.8 percentage points. Adjusted EBITDA came in down 27%. That was down about 652 basis points. Net income looked like it was great, right? It would look, oh my gosh, how did net income up so much, 115%? But that was because of a one-off situation. Don't get excited about that at all, okay? The reality is not that good. Net income on a non-GAAP basis, which is more important to look at because that takes out the one-off there. It was down 39%. EPS on a non-GAAP basis down 40%. So yeah, I mean, income statement-wise is pretty disastrous, right? The good news is they're still profitable. The margins are still, pretty healthy compared to average companies. But for Tesla standards, this is bad. This is a D for disaster, okay? Net cash provided by operating activities up 33%. That's great. CapEx was up about 24%. We know the company's spending a lot right now for future growth. Even though the growth isn't exciting today, it will be in the future. Free cash flow up 45% and cash and cash equivalents up a whopping 31%. We'll speak about that a little later on, okay? Now, here's, they show you obviously kind of what they can do as far as capacity here. But I thought this was really important here. This is market share of Tesla vehicles by region, right? The important thing to understand about this is even the Tesla we look at today, and it's like, wow, they've become such a big company. They're on their way to making 2 million plus cars likely next year, all these sorts of things. It's very exciting, but you got to understand, Tesla's still a very small player in the market. If you look at their market share in US and Canada, I mean, we're roughly 4% market share. Europe, we're still a super small player, under 3%. China, we're a little over a 2% player. Okay, so we're still actually the small guy. We're still, if this is a David and Goliath situation, we're still the David in this situation. That's the fascinating thing, even after all this growth over the years, right? Now, these were two big things. One is cumulative miles driven with FSD, full self-driving beta, in the millions, and in the millions of miles. And obviously, it's an exponential increase in the past, I would say, 9 months specifically. So that's big. That's going to help huge when it comes to the autonomous taxi network opportunity and full self-driving in general, right? And then I thought this was extremely important. Cost of goods sold per vehicle is we've had a consistent drop quarter after quarter after quarter after quarter for many quarters in a row. So that's good news. That could be messed up maybe by Cybertruck. So do keep that in mind. So, but overall, that's something I do like to see, right? Now, these were two big things. One is energy storage. It's never been a business that's really excited me personally as a Tesla shareholder. However, I'm pleasantly surprised with this growth in this business overall. So definitely a thumbs up from me. This right here is the most underrated, overlooked slide, could say unequivocally out there, okay? This is the granddaddy of them all, to me personally, okay? This shows you services and other gross profit. Now, for the longest time, this was a epic drag on Tesla's business model. 2017, about $200 million plus, we can call it gross loss. 2018, almost $500 million gross loss in services and other category. 2019, over $500 million. Then they started to make some strides in the right direction, right? And then we went positive last year. Now look at this explosion of the upside here. Up to nearly $500 million in the plus when it comes to services and other gross profit. Folks, this is going to be heading to the billions of dollars, in my opinion, the billions of dollars. And so you're just talking about going from a massive drag on the business to a massive help for the business model and the profitability overall. And so that right there, folks, I'm telling you, so overlooked, and it's the most underrated thing, in my opinion, in regards to Tesla story right there, okay? Now, you'll be flipping my flapjacks. Cash loads to the sky in regards to Tesla. Look at this, guys. Look at this. They're getting close to $30 billion in cash. Over $29 billion in cash equivalents, and investments in this latest quarter, folks. What a difference. What a difference. I remember the Tesla I was investing into and taking a risk in back in the day was a Tesla that had a horrible balance sheet. I don't want to say horrible, but it wasn't very good. It was bad. Oh, you know what? I'll put it in the other case. It was kind of a bad balance sheet like all the other automakers. And now this company has put their balance sheet into a situation where it's one of the strongest balance sheets you'll find out there in the S&P 500. It's certainly the strongest balance sheet you'll find out there versus any other traditional automakers. Look at Volkswagen, Toyota, General Motors, Ford. Look at all those guys' balance sheet and look at Tesla, and you'd be like, all those guys would change positions with Tesla in a heartbeat. I can tell you that much. And so I'm just, thrilled with that. And I think if you're looking for some good news in these earnings, you have it right there, folks. I mean, we're going to head to well over $30 billion in cash equivalents and investments there. So great. Now, check this out. Model Y, best-selling vehicle globally in 2023. I mean, that's incredible, right? The best-selling vehicle, and this is still with Tesla being a small player in the market, and yet they had the best-selling vehicle globally in 2023. Incredible. The Model 3 is now available globally. I think it looks beautiful. I love that refresh they did. This, I thought, was massive. Fremont factory produced nearly 560,000 vehicles in 2023, an all-time record. Now, the reason I think that's huge is if you've been in the story for a long time, like I have, as in years, you remember when there was a debate about Fremont was going to be maxed out at 250,000 vehicles a year. That was the old thought process many years ago. Oh, Tesla could never produce more than 250,000 vehicles a year out of Fremont, right? Then the goalpost got shifted. Then it was 400,000. Oh, Tesla will max out at 400,000 a year in Fremont. Then it was 500,000. And here they are last year, 560,000 vehicles out of the Fremont location. Incredible. I called this. I knew this was going to happen. Tesla wraps, right? I knew it was a matter of time. This is a huge money-making opportunity, huge profit opportunity for Tesla. This is genius. They need to offer wraps on all their vehicles, because guess what? Check it out, okay? Guess what? Wrapped. My Plaid right there is wrapped. The Model X right there is wrapped. Almost everybody I know that has a Tesla ends up wrapping their Tesla. And so Tesla's just missing out on a lot of easy money by not offering wraps, just to be quite frank with you guys. So huge money-making opportunity for Tesla there, and their price points are pretty expensive from what I saw. It looks much more expensive than if you were to get it wrapped at another place, but supposedly they're supposed to be higher quality and those sorts of things. So big money-making opportunity for Tesla there, and that will help that services and other category out, okay? Now, my opinion on the numbers overall, blah. I mean, nothing to be very excited about. The only thing to be excited about, I thought, was the cash and cash equivalents. And the only other thing to be excited about was margins came in better than feared, right? It could have been worse. It could have been worse. And so outside of that, nothing else to be excited about. Revenues up 3%. That's a joke for Tesla. Income from operations being down, 47% or whatever. It's insane. So yeah, nothing to be excited about, but that was to be expected. No one expected good numbers. I told you guys I was very fearful of them missing analyst projections. Sure enough, the company missed analyst projections. So nothing I didn't see coming in regards to that whole situation, okay? So that covers the numbers, my thoughts. Now let's get into the massive statements made by Elon, which ones really mattered significantly and which ones I thought maybe didn't. Then we'll get into my overall opinion of the conference call, and then we'll talk about if I'm buying the dip on this, what I'm going to do with my put options, all those sorts of things, okay? So first up here, this is pretty big, and this kind of went a little bit on the DL, but I thought the CFO did a great job of kind of talking about this on the conference call, that now the $7,500 can be taken off at the point of purchase, which is big because now you don't have to wait till the end of the tax season. And I think that's big for consumers. So I'm excited about this. There are still some hoops you got to jump through to make sure everything's correct on the backside of this, but I think there's a step in the right direction, and I'm excited there because it's going to make the vehicle look a lot less expensive right from the go if somebody goes to buy a Model Y right now or something like that. So I thought that was big. Elon says in the second half of 2025, he's expecting the Model 2, the next generation vehicle, whatever we want to call it, to go into production. Now, there's a lot of debate on what this vehicle is going to be, when they're going to show off this vehicle, all those sorts of things. But he's talking about second half of 2025 going into production, which would mean they would have to show off this vehicle at the end of this year and start building the hype around it and pre-sales and all those sorts of things if they're actually going to get it into production the second half of 2025. So, there's a lot of debate about it. I've always thought it should be a two-seater vehicle. There's a lot of people that debate me on that all the time. I think that's what it's going to be. I think that's what it should be. By the way, if they call it Model 2 and it's a two-seater, it's like genius branding. But at the end of the day, drive on any highway in the United States of America and look inside the cars of how many people are inside the cars. You're going to find one person's in there. It's the driver. And a bunch of seats are open. And maybe there's one other person that's a passenger. And the rest of the seats are open in a 5-seat vehicle. And so I think it makes the most sense if you want a real vehicle that could be massive in terms of sales volume and in terms of the robotaxi opportunity, make it 2 seats. Make it 2 seats. I'm telling you, that's the smartest way to go in my personal opinion. And I hope that's the way Elon and the team's going here, is a 2-seater vehicle. I think it'd be by far and away the best. And on top of that, the other thing that's ingenious about that is, guess what? You're going to need way less batteries for a vehicle like that. And it's going to be all about cost. At the end of the day, if Tesla had a vehicle that was in the market brand new for $20,000, it's selling insane. But they don't. And so you'd be able to cut down on cost so much, you'd be able to get more range because it'd be smaller. And it's all most people need, just to be honest with you guys. So, man, we'll see. We'll see what happens there. But I can tell you, if they came out with something that's $20,000, $25,000, it's a 2-seater, oh my God, even I would buy something like that. It's just a little commuter vehicle around. Like, why wouldn't I? Like, of course I would, even with a family, because I'm like, I already got a family vehicle. I already got a Model X I could drive the family around in. What about all the errands I run in place I go by myself all the time? Like, that would be perfect. So we'll see what happens with that. But they're talking about the second half of the year. Elon says that they're going to basically ramp the next generation production line in Austin. Then after that, talking about Mexico next. Okay? So Austin first, then Mexico for next generation Model 2, whatever we want to call it. Elon also doubled down on basically wanting 25% of voting control. But I thought something that was really important is when he got asked about this question and when he answered the question, he did not come across as hostile. I think a lot of people, the problem is he tweeted it or X'd it or whatever you want to call it nowadays. And the problem with text is people read it however they want. It's up to the person to interpret it. Are they coming across as hostile, mean, whatever you want to imagine in your head, right? But when I listened to him on the conference call, he sounded 0% hostile. He just kind of laid out his case, why you think it would be a good idea to have him be, control 25% of the voting shares, being that they're going more into AI and those sorts of things and have a heavier emphasis. Fair play. But he did not sound hostile at all. When people read that tweet, they're like, oh my gosh, Elon's mad, all this, that. I'm like, once again, people read things however they want. Now, I told you guys the thing that mattered the most on this conference call for if Tesla stock's going up or down is outlook on margins. And sure enough, analysts asked questions about margins. They won't commit to anything margins-wise in terms of going back up. They didn't give any concrete, like, oh, for sure, back half of the year, we're going to see margins increasing back up to the 20% rate. There was nothing like that. Nothing like that. And, they just kept kind of bringing it down to, like, well, we got to bring costs down. We got to bring costs down, those sorts of things, which is cool. But there was no, like, what you really needed in terms of feeling confident, like margins have troughed, we're, about to head back up. There was nothing like that. And so that leaves the door open to maybe margins going even lower from here, right? So the worst fear for the short term is what played out there. That's the bottom line with that. So that was disappointing, right? And if you're wondering why that stock's lower after hours, this is the main reason over everything else. Everybody knew the numbers were going to be crap. Everybody knew all this stuff, basically, most of it. There was a lot of the new commentary was on the next generation vehicle and platform. That was some of the new information. But this was the biggest thing, was can we feel confident margins have troughed and they're going back up? Next phase of Gigafactory in Nevada has broke ground, they spoke about. I think I had maybe one too many O's in there. And that process is rolling, so that's good. They did comment on that. Gigafactory Mexico. Now, here's the interesting thing. I know a lot of people are getting excited about Gigafactory Mexico, but basically how I understood and interpreted it on the conference call is that they're really not going to go forward with Gigafactory Mexico until they have everything figured out in terms of their next generation production line in Austin. So that definitely slows down the process of Gigafactory Mexico. Okay? So don't get too excited about Gigafactory Mexico in the short term. It sounds like that might be more of a 2026, 27 play around that based upon Elon and the team's commentary there. Okay? Now, they got asked about basically licensing FSD, the FSD software, right? Full self-driving. And basically Elon said that other automakers don't believe in full self-driving. They don't believe in kind of what Tesla has and what they're up to there, right? And they're not taking it serious. And so these companies aren't really interested in licensing the FSD right now. Just bottom line with that, right? And he was kind of disappointed in that. And my thought in regards to this is I am not disappointed at all in this being this way. I would prefer it to be this way. The fact that all the other automakers are not interested in FSD right now, right, is I think the best situation for Tesla, because when it's clear as day, like FSD is a leader in the market, right? And the other automakers want to let's just call it license potentially FSD because they haven't done the work on that side. Well, then at that very moment, Tesla's going to have a massive amount of negotiation leverage, right? Versus now, when it's still kind of more of a question mark, Tesla might have to do deals out of, a position of weakness rather than strength. No different than if you look at the deals, obviously the team's put together with almost all the major auto manufacturers when it comes to EVs, right? And for supercharging, is because Elon and the team proved it out, right? They built out the supercharger network, and so all the automakers are like, it's clear, like Tesla has a supercharger network, we need to adopt this, right? And so maybe in a few years from now, it's clear to the other automakers that we've got to have Tesla's FSD. And then Tesla's going to be in a way bigger position of power and potentially be able to take much bigger fees from that. And so, I have no problem with the other automakers not believing in FSD, not being interested in it right now. I think it's the best thing. I think it's the best thing, okay? Now, next up here, this was where the conference call went bad. Most of it stayed on track, but this is where it went bad. They started talking to him about Optimus, okay? And he mentioned about going into production in 2025. And I'm like, dude, no, it's not freaking going into production in 2025. It's not going in production in 2026. Probably not going in 2027 or 2028 either. And it's certainly not going in 2025. Okay. And I'm just like, what are you talking about, Elon? Like, that was one of those Elon statements where he just says something crazy. And it's just like, no. Okay. And then his main man on the conference call even owned him. And people are like, oh, that guy's getting fired tomorrow. The guy goes, we needed to do something useful. And Elon's like, we do have it does do some things that are useful. It's just like, oh, gosh. Like when your main man's right there on the conference call and says we needed to do something useful first. I mean, that was just like, oh, that just threw so much cold water on the statement that Elon was making. So, oh gosh, it was awkward, a little bit embarrassing, and just like what. But I'm so happy that guy did that. That made me more comfortable as a Tesla shareholder. We need somebody around that can check Elon Musk and tell him when he's a little crazy. We do. Like, just straight up, we need somebody like that, right? Everybody needs somebody like that. And when he said that right on the conference call, we needed to do something useful first, I was like, oh my gosh, that was one of the most comical things I've ever heard on a conference call. And I've probably listened to thousands of conference calls over the past 15 plus years. Man, that was good. Elon said 250,000 plus Cybertrucks, North America per year, they're going to get up to. I have no doubts in that. I think he's being very, very realistic there. No doubts at all. Obviously, they're not going to hit 250 this year. They're not going to be able to get production up fast enough for that. But is 250 in the cards for potentially next year? Sure. So no disbelief there. I think he's right on. Megapack. They mentioned about Megapack demand being strong in 2024 and going into 2025. They even mentioned 2025 as well. So Megapack looks like it's in a much stronger place than we've seen it in any time in pretty much ever. So that's great news in regards to that. Elon Musk left the door open. They asked him about potentially doing an AI Day update because the last time they did one, I think, was September of 2022 or so. And Elon left the door open to the potential. He did not commit to for sure AI Day. He did say that some of the competitors copy them whenever they do one of those AI days. And so that's a little bit of a worry to not give away the secret sauce when they're doing one of those days. So we'll see where all that goes. But he left the door open once again for something potentially in late 2024 in regards to that, right? They asked him about Dojo. He talked about Dojo, I would say very cautiously, borderline bearish for Elon. There he's talking about Optimus going in production in 2025, and here Dojo, he spoke about it in regards to like not very optimistic is the way it came across. He kept talking about it's high risk, it's a high payoff, it might not work, these sorts of things. So who knows, maybe Dojo is going to be what ends up working. It's going to be great. Another thing he talked about, he mentioned a couple times about 1% cost improvement equaling $1 billion, and like that being kind of like a mind-blowing thing. So I don't know where he was going with that. I don't know if he was going after future cost of revenue, like in 2024 or beyond, because the math doesn't quite work based upon last year's numbers. So I'm not sure where exactly he was going with that, but he was basically talking about 1% cost improvement. He's talking about a penny on a dollar being $1 billion. So that was interesting, right? And Tesla's very focused on continuing to bring down the cost of everything they're doing, right? Now, he also mentioned toward the beginning of the call too, it was probably in the first 5 minutes of the conference call, he mentioned that Tesla, he sees a path to Tesla becoming the most valuable company in the world. This is not the first time he said this. He said this several times now at this point in time. Now, I don't like this. I don't like when he says this. He said it several times over the past few years, and I don't like when he says it for two reasons. One is it sounds kind of pumpy, doesn't it? Like, when the CEO of the company is saying I see a path to us becoming the most, valuable company in the world. It sounds a little pumpy. So I don't really like it from that standpoint. The second thing is it's out of his control. And I don't ever love it when anybody makes decisions or thinks certain things are going to happen when it's out of your control. It's not in Elon Musk's control if Tesla's the most valuable company in the world or not. It's not. Because that's dependent upon what everybody else is. What does Microsoft do over the coming years? And Apple, and Meta, and Amazon, right? They might go to $5 trillion, $10 trillion, $20 trillion. And then, Tesla's still playing a game of catch up. It's out of his control. It's like saying, I'm going to be I don't know, the best basketball player in the world. Well, I could try to be, but that's, it's a kind of a worthless statement. I got to be the best me I can be at the end of the day, because there might be some guy that's just way better, and just like, that is what it is. And so that's why I never like when he, makes that statement. He does it almost every conference call now, it seems like. And so for those two reasons, I'm not a big fan of that statement. That is not a statement that ever makes me excited as a Tesla shareholder. That's not ever a statement I'm like, oh yeah, we're going to become the most valuable company in the world. I never hear that. I'm like, woo. Every time I hear that, I kind of cringe a little bit. Like, damn, Elon, like, why'd you even have to say that? Like, just stay away from that, man. So my overall thoughts on the conference call, right? And I did the Twitch live stream. Thank you for everybody that showed up for that, by the way. That was a beast of a live stream. And I will be doing more Twitch live streams this earnings season. I'll do Meta, Amazon, Apple. I'll do PayPal. I'll probably do Palantir's conference call. I think PayPal is going to be the huge one. I think we'll probably have bigger viewership on PayPal than we actually had on Tesla here today. But my overall opinion on the conference call was it was much better. Much better conference call. Way better than the last conference call. Way better. Actually, probably better than the last couple conference calls. So definitely taking steps in the right direction. It wasn't perfect, no. The optimist stuff was like, come on, man. Obviously the statement about most valuable company in the world, nah, come on. There was maybe another thing or two in there that I was kind of like, we're going a little off track here. But overall, I thought the conference call was much better. I thought Elon Musk was much better in terms of giving useful info and the team in general. So I thought they took a step in the right direction for this conference call. No doubt about that. Okay. Now, let's talk about if I'm going to be buying the dip, what kind of my plans are here and all those sorts of things. So I went in with the public count 1,700 shares deep on this one, right? And most of those shares I've held since probably like 2019 or so. And then I had my put option contracts here. These expire September 20th, 2024, 255 puts. These are basically a hedge, against Tesla and against the market if it was to go down or something like that, right? And they already have been doing pretty good. I've always kind of thought about cashing these kind of if the stock's between, $200 and $150, right? Somewhere in there is kind of like a cash time for me, right? Because these will decay over time, right? They expire September 2024, so as you get closer and closer to September 2024, they're gonna decay in value. That's the way option contracts work, right? So if I could get something here in the short term at a very attractive price, I would probably go ahead and take that, even if felt like the stock might go lower short term, just because there's going to be decay in there as well, right? And so people pay up the premium given that they've got time to play with here. So the stock's probably going to be somewhere in that range over the next few days, right? So I might cash one of these contracts. I have two contracts. I might cash one. I can probably make a 50% to 75% return on investment on this in a pretty short amount of time. So I think that might look pretty attractive for me going ahead and cashing there. Maybe in the next 48 hours, especially if the stock is under 190. If we're under 190, I would say there's an insanely high probability I cash out of one contract and then leave one to kind of roll and see if we can get some more weakness, maybe in the S&P or Tesla in general, and then cash the last contract there. And then what I'm going to do with that money, I might buy some more Tesla shares. I might go ahead and move that into another hedge. Now, speaking about Tesla shares, I would like to buy some more Tesla shares here under 200. I would love to get back up to 2,000 shares here in the public account. I have 1,700 shares right now. I'd love to take this baby back, to like 2,000 shares here. And so the further the stock is under $200, the more I'd want to buy Tesla stock personally. But I do have to be careful here. And the reason I have to be careful, folks, is Tesla's a massive weighting already. It's almost 19% of the portfolio. Now, given if the stock should be down pretty big tomorrow, the weighting should be a little less. But the problem is I'm so top heavy. Meta keeps freaking going up. And I wouldn't be surprised I wouldn't be surprised if Meta breaks 400 very soon here. And so Meta's weighting in the portfolio is going to might go to 40% here short term. And so I need to be careful being how top heavy I am in this portfolio. And I'm not just going to sell Meta because like that stock's probably going to 500 and then on its way to 1,000 after that. So I'm not in any rush to sell out of Meta, even if it's a big weighting. So that's the one thing that's probably keeping me from making Tesla a much bigger position. But the more it goes under 200, the more attracted I am. If Tesla's 150 tomorrow, I'm a much like much more likely buyer than 195, let's say, for instance, right? Alrighty, guys, appreciate you joining me as always. Thanks so much for being here. If you're looking to join my private stock group, get access to that and apply for that, pin comment down there. You get access to all my best courses, 6 and 7 figure Discord chat. You get to see the moves I'm making in my nearly $2 million Fidelity account and be part of it. We got a lot of Tesla shareholders in there. I mean, a lot. So if you want to join us in there, pin comment. Much love and have a great day.